The markets are pumping after some Fed minutes showed that quite a few officials feel like it is time to cut rates. We did see a big move in a jobless report number that we'll be discussing today, as well as much more on Money Never Sleeps. Thanks for joining us today, everybody. As we get going, hit that like button. Remember to subscribe to our channel if you have not yet. And most importantly, nothing that Kevin or I say is financial advice. So please do your own research before you make any sort of financial decision. Kev, it's good to see you. Had some, light day in the markets yesterday. Very boring. Today starts off with a delay in the reporting of the updated jobs figure, which never really seems too good. So the Bureau of Labor Statistics revised the employment growth down by 818,000 jobs. That's sizable. That ain't nothing. So, the markets at first weren't really sure how to digest that. And then just an hour ago, we got the July FOMC meeting minutes. The markets have pumped since then because a few officials in there said that they wanted to cut in July because they were concerned about the job market deteriorating further. Well, guess what? Based on that BLS report, it did in fact do that. And so now, we're pretty much guaranteed a cut in September in 4 weeks from today, actually. How much is now the question? How are you doing on a very, very interesting Wednesday in the markets?
Yeah, I'm doing all right. Boring. This is even though the market's up off of that news, it's very boring out there. I feel like this has been a very lackluster week. Been trading within ranges, trying to climb a little bit higher. Nothing really that's going to shake the markets too much. I think it's stupid. Obviously, I think a lot is stupid, but I think it's stupid to see the markets getting excited once again for the Fed members saying that they want to cut rates. It's like, weren't we here back in November of last year, right? And we were like seething just because we wanted to get 6 rate cuts. You're not getting that. It's funny to see how stupid the markets can be and how irrational and illogical they are. Things have not necessarily changed. And again, back in 2008, we remember everyone was saying the economy was booming from 2007 to 2008, right? There was nothing to worry about. Subprime mortgages were contained. The jobs that were lost from the BLS data when we get the revision from that year was 844,000, I think. So roughly very close to what we have right now. And everyone was saying that the economy is in a booming state right now. So there's a lot of things that are paralleled. I don't know if people know this, but in 2018, 2007, when they did the first rate cut, that was September 18th. When's the next meeting? September 18th this year. There's a lot of parallels that are kind of going back and forth. It's really ironic. We also see oil kind of topping around the same time as it did back in 2007, 2008. 2008, that summer of 2008. Oil's kind of dipping here. There's not much demand. There's a lot of things that are kind of playing out the same way, which are really interesting. But again, the markets, for some reason, have got no rate cuts. The market's going up only higher and higher each time. What happens when you get your rate cuts? Right? That's a question we have to kind of ask ourselves. And especially since it seems like now we are going to get a rate cut in September. It's almost, it's been priced in for fucking a year at this point, it seems. But it seems like more now it's going to be here. And it's like, once we get that rate cut, what do the markets do?
We have some more data to come out the rest of this week, so I think we will see some continued volatility. Initial jobless claims tomorrow, services and manufacturing PMI, and some existing home sale data. Then Friday, we hear from Jerome Powell at Jackson Hole. So now the question becomes, does he comment on these minutes? And more specifically, what does he say? Because it will 100% be brought up, the job revision. So what does he say? How does the market respond? My guess at this point is that he is going to sound more dovish than I would have thought. Like when we first talked on Monday, I was like, he's going to be pretty neutral here, I think. I think he now, though, with that news, He's going to try to sound a little bit more dovish on them trying to, save the labor market and whatever that takes with rate cuts. And I think the market could take that and run with it earlier in the day. So that's kind of where I'm viewing things. How do you think the rest of this week is playing out with the data and with Powell speaking on Friday?
I think we're going to continue going up. I think we need to close some gaps both in the S&P and the Nasdaq. But given with what's going on in the DNC, there's necessarily no reason for this market to drop as well, right? The market didn't drop when the RNC was going on. I don't necessarily think the market's going to drop during the week. The DNC itself, I think there are things that are definitely spooking the market itself. We mentioned, or I guess we haven't mentioned it really in a while, but unrealized capital gains taxes, potentially even a higher tax rate on corporations. There's a lot of things that are being thrown out there. Should be scaring some corporations, especially if they're heavy on assets. I don't necessarily know if they want to carry that into the next year, but it's just things that I think we're going to start seeing some positioning before we get into maybe the next few weeks, especially into September, how they are going to start playing that, given that we're in the election cycle. But this week, I don't think that there is any reason why the market should drop. That being said, I do think that we will continue to see the VIX be very sticky around here. And that's because the yen is doing something very different here compared to the US dollar. US dollar keeps losing value. The yen's getting stronger. Not necessarily something that the Bank of Japan likes to see is they lose that 145 peg. But we do know that the yen and the VIX are heavily correlated because everything's wrapped up in the tech trade right now. That carry trade is just going to continue to cause people to go long on the VIX. So I do think that this week, even though we're up only, there's a good chance that we could continue to see the VIX rise with it, which is kind of weird. We haven't seen that in some time.
Yeah, you brought up the dollar. It is now at its lowest point since the very first day of the year. So the dollar has round tripped in value over the last 8 months. You mentioned the VIX. It's weird seeing equities up and the VIX up almost 4% on the day. Wouldn't normally expect to see that. It's actually been crypto currently outperforming, and I say that as Bitcoin hits 61K again. Crypto definitely outperforming equities today. We had seen a little divergence in the other direction in the previous few weeks. Now we're seeing crypto catching a bid here, while a lot of these tech stocks are trading pretty flat on the day, from between down 0.8% to up 0.8%. So not a ton of excitement in the equities markets, but crypto definitely having itself a strong push here.
Yeah, I saw a tweet from Zero Hedge saying that Bitcoin finally prices in Arthur Burns or something like that, pretty much calling Jay Powell one of the worst Fed presidents since Arthur Burns. And that's why the market's going up, because inflation's probably going to get out of hand. I thought it was kind of cute. But seeing that here where we are right now, I'm not surprised that the market is pushing up a little bit here, especially with the news on RFK possibly backing Trump, two pro-crypto candidates, possibly joining forces, and RFK probably having some hand in the administration down the line, cabinet. It's going to be very interesting to see if that's the ticket and they win, what promises they'll have on crypto. I think that's what some of the market is kind of excited about. I don't necessarily think that. I think there's a bit of a squeeze as well, somewhere wrapped up in there. But looking at this, it's above a key level of resistance, right? This white line here is acting as a huge level of resistance. But mind you, look at all these wicks. It's very possible that this could just, wick down below it once again. We could just be in this distribution phase where we're just, every time we get a chance we get to sell, we're going to sell up there. I mean, even as I'm saying that, look, we're already seeing the wick right there. So we kind of have to watch and see how this closes. I think these wicks are kind of telling us that this is where a lot of people are selling. And that's not necessarily the most bullish of circumstances, especially it's on the daily chart. We're not looking at the minute or the hourly or the 4 hourly. This is the daily chart. That's a pattern that tells me that there's a lot of weakness up in this range up here. I do know, and I continue to say this, Tether is printing billions of dollars to keep the price elevated. I'm not saying that they're trying to push the price up higher. They're just trying to keep it from going lower. And we've taken a look at some of these levels where we're probably going to go if we cannot find a bid. We cannot go higher and touch the top of this trend line at 69K. We're going probably down to about 47, 48K. Does it have to hit there directly? No, it doesn't have to be one wick or how this is broken down. We could find some support somewhere around like 52, 53. It's very possible. 53, 2 maybe. It seems like there's a pretty good amount of support there. Yeah, catching on top of that. So that could be a level that we could touch. Let's put a little line there. Keep an eye on that over the next few days to weeks. Let's make this blue. And, I think the big one that we're watching right now is this bottom trend line here. I think this is the one we're going to probably find the most amount of support, and maybe we get a bit of a push to the upside. But that's only if this fails. If we're not able to start closing above this consistently and push up and maybe even test some of these higher levels, then these are levels of support resistance that we have to continue to play with Bitcoin. Nothing tells me that we are going one way or the other. I think it's more likely to push down than we push up. And that's because we continue to see the stochastic RSI extremely overbought with very little price action to the upside. That is pretty good weakness right there in the markets. And let me just pull up the volume real quick. Yeah, volumes are extremely low. What am I looking at this on? This is on Binance. So it's, still considered one of the bigger exchanges, but it looks like the volumes are fairly weak. Price ain't pushing up. Stochastic's moving pretty quickly to the overbought. Not the most bullish of circumstances, but anything could happen. There could always be a squeeze. Some, markets are irrational here, and I think that's telling of the end of the cycle.
Yeah, I don't know if I think we're going to disagree. We're going to agree to disagree on the end of the cycle part of it.
I meant like for a financial cycle, like for TradFi, volatility, end of a move. I don't think it's the end of a cycle for Bitcoin. I still think Bitcoin has every chance of going to 100,000. I just think it's got to make a little round trip down to a much lower level first. But I'm still bullish on Bitcoin. It'd probably be my biggest holding. But yeah.
Yeah, I think you're seeing a lot of optimism out there on the timeline. You're seeing people, expecting maybe alts to start to catch up here. I still think that is a 2025 play. I think
Agreed.
The alt market is doing all right, but we'll see it make some major moves next year, is my opinion, and how I am positioning myself. What else are you seeing? Anything in TradFi look interesting? I know.
Yeah.
To belabor anything at this point.
Nah, let's just go through some news, talk about maybe even look at Lowe's price chart, but let's look at Walmart because they just dropped their entire stake in JD, which is obviously a Chinese corporation. And this is big because the part that really interested me was right down here. JD.com's latest shareholders report stated that Walmart held 9.4% of the company's shares as of February 2023, and then Morgan Stanley brokered the deal. So this is a huge dump that Walmart made on JD, and we know that Michael Burry was bullish on JD pretty much all of 2023 into 2024, right? He pretty much called the China rally when it was getting down to those lows. It's a lot of money that was made there, but we're seeing obviously a drop. They're opening up some cash position. They're saying that's because they're going to do Walmart China and they want to expand their own operations in the Asian market, specifically China, outside of maybe JD. Sure, that's one thing. I also think that it's just, cutting exposure to certain areas and trying to free up cash. We do know that the consumer is in a pretty tight area itself right now. That I don't think any really corporation can fight that to say that. If they do, they're lying, I feel, to our fucking faces. But let's pull up Walmart real quick, and you can see on the daily just gapping up like crazy, right? And this was kind of bullish news, if you ask me, for Walmart itself, because the market was pretty much liking it today. As soon as it saw that it freed up that much cash, shot up. It's not up a ton now, but still, what is this? Is this all-time highs right now for Walmart? Seems like it, right? We don't look at Walmart too often, but yeah, I mean, look at this chart. Look at this fucking chart. It is all-time highs. The interesting about it too, and we look at this on the monthly, look where we are, 100 and 100. This is an extremely overbought stock on the monthly, which tells me the macro, it's due for some form of correction. I mean, the last time we were at 100 and 100, it was roughly August of 2023, had a barely dipped, but now here we are. It's kind of a double top on the stochastic RSI. Volumes are dropping. I think that liquidity is going to continue to be an issue, and they've freed up a lot of it. Maybe it holds up fairly well against other stocks if there is a pullback, but I do think that, this is also Walmart positioning for maybe a chance to either buy back more stock if it does drop and opening up some of that cash position, or being able to, just prepare for any type of cut. Maybe they're even trying to do some good, right? Maybe they're not going to lay off people or try not to lay off as many people, and they just are going to have some cash on the side. I don't think that's the case for any corporation ever, but I just like to say that because maybe Kevin isn't all doom and gloom. But looking at Walmart, let's look at JD now. JD's obviously bleeding like crazy, but if we look at this on the daily, it had a pretty good dump post market. It was down, I think, 9% in post market after being down 5% yesterday. It was down 4.5% yesterday, and post market was down a lot more. Seems like they're buying a bit of the dip. They're going to do that right now. Seems like markets want to buy every dip. That's the thing that's really interesting to me, right? We're seeing these large corporations, these large institutions, these people who are not stupid and they're really good at making money out there, and they're selling their shares. And what's the market's first initial reaction to them selling their shares? Well, let me buy those shares from them. I don't know what the logic is there. I don't think there is any. I think it's just like get in before you miss out. A lot of FOMO out there for maybe people who are looking for a scalp trade or whatnot. It just seems like you have to play the macro as much as you want to play the short-term time trade, and just kind of picture that, hey, there's a lot of these guys that are dumping. Do I really want to get in for a little position? Do I make sure I put my stop loss there? Probably. You probably should be thinking about that. Again, not financial advice, but it doesn't make a lot of sense to be buying up the shares of those who've made so much money already from some of these stocks and just thinking that, oh yeah, it's probably going to go up. They're just taking a little bit of profit. It's like they haven't taken any profit up until this point, and they've taken pretty much all of the profit in one go. I mean, Warren Buffett continues to sell Bank of America. Yesterday, the only one who hasn't really been selling much in the past 2 weeks, or we haven't seen, is Jensen Huang. We haven't seen any really much NVIDIA sales. However, NVIDIA is at a pretty high point right now. Wouldn't be surprised if he is going to be selling in the coming days or so. Just something to look out for. But that's just something that's really interesting to me. I think that was important. Lowe's, let's look at that. Relatively doing okay, despite saying that there is going to be a lot of slowdown in the consumer. They expected the consumer to have extreme weakness in the months and the year ahead. Stock not necessarily reacting too much, still in the sideways trade, going right around this 242 level. So it seems like the markets just aren't reacting to any news. They weren't reacting to any of the rate cuts, but now they get this bad jobs data, they just think that instantly is bullish for the markets. It's like this is a mind-boggling time to kind of try and make sense of anything. You kind of have to look at more of how people are positioning themselves as opposed to what the price is actually doing in some of these day-to-day trades.
Yeah, my interest is going to be with Lowe's and Home Depot, how that's impacted by moves in the housing market.
Yep.
With rates coming down, Harris proposing this for an increase in the first-time home buyer credit. What is that going to look like for the market for both new home builds and renovations to existing homes? Because I've been looking at houses myself. I've talked about that before. There's a lot of places that need a lot of renovation. So, will we see some people do more DIY stuff? Will it be from contractors? Who knows? But that is one where I think you could see some possibility for and those are good dividend stocks as well. If that's your particular cup of tea. So something to keep in mind there.
Yeah, absolutely. Home Depot, I'm just looking at this. Finding some resistance on this trend line up here. I'm not going to trade this, but that's noteworthy to see that there's resistance up here, and you also are in a parallel channel. See how that trades over the next few weeks to months. I think weeks more is going to be more importantly. And then look at lows real quick again before. Just want to talk one thing about the yen, and then we can wrap it up. Yeah, see, this is like a megaphone pattern kind of, or maybe, I don't know. That's shitty. I don't really care about lows. I really don't. I only talked about it because I saw that they were saying that the consumers.
We don't need to overanalyze lows here.
Yeah, fuck lows. I go to Menards. Let's see over here. The yen. That's what I wanted to talk about.
A great jingle Menards does.
Menards. Yeah, I like that one. I had to sing in my head real quick. Yeah, this is the yen. The end, same thing, because that's where the markets are going. On the daily, you can see that we're getting close to a death cross. We'll be here for that. But the interesting thing is the yen is kind of going back down after being supported at this level, roughly around 141. 145 was a pretty important level, and it's gone below that. Why is this happening? Obviously, because the dollar, we talked about this a little bit at the beginning. Dollar is just tanking here. I wouldn't necessarily count the dollar out. I think there is definitely an argument to be made that the dollar could still go to 120. This is the third or fourth time it's roughly been in this range right here, and it's held the support each time. We're getting closer and closer towards rate cuts. I do think that there is going to be the argument that we are also at extremely high levels in the equity market. Any type of sell off, any type of correction, there's a good chance the dollar could bounce. Maybe not to 120, but maybe to some of these ranges once again. So I think a lot of people are saying the dollar's dead, equities are up, so where you're going to make all your money. But no, this is actually the reason why the yen is actually getting stronger, because the dollar is weakening off of rate cut bets. And because of this, we're seeing the yen carry trade also kind of implode. We saw a lot of people go risk on once again after the carry trade kind of blew up after we were down 12% or so in the Nikkei that day. And, a lot of people started buying. That was also marked the bottom for a lot of tech stocks in the US, right? We saw the NVIDIA, I'd say at around 90 or so, started bouncing. Same day, everything. Now you're going up into pretty much, this level where there's been a trend line resistance that's playing out. The thing is that the yen carry trade is all tech stocks. It's where there's the most amount of value in the past year. That's where everyone kind of threw all their money in. That's where they're kind of just throwing more and more leverage into it. I think that's where we're going to see the most margin calls. It's going to be, these banks like Norchukin, SoftBank, some of those like top banks that are just heavily invested on stocks are probably going to see some pain. Not saying they're going to go under, going to see some pain. And if we look at the Nikkei right here, you're at the 50 moving average, finding some resistance there. You broke above the 200. Okay, cool, whatever. But there's also a little gap that needs to be filled down there. Extremely overbought on the daily, and the yen is getting stronger. And you're going into the weekend. And we know that for some reason, the yen likes to get really strong from Sunday into Monday morning. And that causes some pain in the equity markets for Japan. This is a tumble that's going to go back and forth. But the other thing is, too, why is the VIX going up significantly? Well, it's because people are still kind of hedging against the fact that the yen carry trade isn't quite done. I said that there was a good chance we could see the VIX still spike to a new all-time high. I think that's very possible. The interesting thing here is this trend line here. It's finding support around 14.5. I think that we are going to see an elevated period of the VIX. We see that on the stochastic RSI, it's extremely oversold. It could bounce above the 50 moving average. I think it's going to stay between the 200 and the 50 for a period of time. I should say above the 200 or the 50 for a period of time. And I do think that the next time we get to like say 35, 40, something will have broken, because they had the chance to unwind their positions. They added more leverage. I think there's a good chance that the reason they added more leverage is because they're worried about their positions itself. To unwind something as big as the yen carry trade, it would probably cause a lot of bankruptcies or insolvencies, right? So your best bet is to get one more fucking rally where you could, use the carry trade, make some money, and hopefully you can make your balance, the books at the end of the day balanced. Don't think that they're that capable of managing that. I don't think anyone in the world is capable of managing that, especially when we are not in the strongest economy. And we really have to say, outside of QE from governments, which we are seeing, as small as it is, we are seeing QE from these governments. There is no money flowing in from where you should be making the most amount of money, consumers. So that's something that you just kind of have to keep in mind. And I think a lot of people are betting on the VIX going up once again. Maybe they don't think it's going to go up to all-time highs. I definitely think it will, but I think that it's going to coincide with the next major events that could, take down some important players. And I'll talk about like institutions, hedge funds, stuff like that. People who just got too greedy. And I think there's a good chance, and it's very logical to say that those are the ones that probably be hurt the most, and it could happen overnight.
There's one thing we can count on is people getting too greedy. All right, that is going to wrap it up for today's show. We'll be back on Friday to close out the week. We'll discuss Jerome Powell's presser up in Jackson Hole, how the market responds to that. It should be a fun day. So make sure to tune in on Friday. Hit that like button for today's show. Subscribe, turn on notifications, drop a comment. All right, I got all that out of the way. Appreciate everybody for joining us today. Have a great rest of your week. Stay safe in the markets. We'll see you Friday.
Take care, everyone.